welcome to the World Battery Metals and Mining News for the 29th of July 2024. Union at BHP's Escondida mine urges rejection of contract offer, strike possible. The union at BHP's Escondida mine in Chile, the world's largest copper mine, has urged its nearly 2,400 members to reject the company's final contract offer and prepare for a potential strike. Voting will take place from Monday to Thursday, and if workers reject the deal, a strike could commence immediately unless mediated by the government. The union, representing 98.5% of frontline workers, argues that BHP's proposal, including a $21,044 bonus per worker, is insufficient and seeks a share of shareholder dividends amid record copper prices. A 2017 strike at the mine heavily impacted production and global copper prices. The union has prepared a substantial strike logistics fund and credit arrangements to support workers during the strike. By Fabian Cambero, editing by Alexander Villegas and Cynthia Osterman. LME approves Saudi port as warehouse delivery point. The London Metal Exchange, LME, has approved Jeddah, Saudi Arabia, as a new warehouse delivery point for copper and zinc, with the listing becoming active 3 months after the first warehouse company's approval. This decision aligns with Saudi Arabia's Vision 2030 reform plan, aiming to enhance its global position in energy, mining, logistics, and industry sectors. The LME, which typically registers warehouses in net metal consumption areas or key transit hubs like Rotterdam, has also amended its location approval policy concerning warehouse insolvency. The LME is owned by Hong Kong Exchanges and Clearing. BHP's Spence copper mine in Chile, now fully autonomous. BHP's Spence copper mine in Chile has successfully transitioned to a fully autonomous operation, marking 3 months without safety incidents since its status was achieved in April. This mine, BHP's second largest copper producer after Escondida, has moved 80 million tons of material and surpassed its production plan, thanks to the largest autonomous fleet in Latin America provided by Komatsu. The transition, which began 2 years ago, has reduced risk exposure by 90% and increased operational efficiency, setting a benchmark for the mining industry. This milestone follows a $2.5 billion expansion project that extended the mine's life by 50 years. Nornickel sticks to production outlook despite furnace repairs. Russia's Nornickel reported a 1% drop in nickel output for the first half of the year, though it maintained its 2024 production targets for both nickel and palladium. The dip in nickel production resulted from furnace repairs at its Nadezhda smelter, which are expected to enhance reliability upon completion. While Nornickel is not under direct Western sanctions, it faces challenges sourcing equipment due to Western companies' avoidance, leading to delays in significant repairs. Nornickel continues to pivot towards China and other non-Western countries for technology and market opportunities, including talks to shift copper smelting and battery sector nickel production to China and plans for a platinum group metals refinery in Bahrain. The company remains committed to fulfilling its contractual obligations despite increased price volatility and supply uncertainty caused by Western bans on Russian metals. Saudis see Codelco as good option for lithium partnership. Saudi Arabia is eyeing Chile's Codelco as a promising partner to develop lithium deposits, aiming to import and process the metal domestically and sell batteries locally and globally. Industry and Mineral Resources Minister Bandar bin Ibrahim Al-Khuraif highlighted Codelco's capabilities despite its current challenges, including managing large investments and underfunding issues. Saudi Arabia is actively seeking critical minerals like lithium to diversify its economy and bolster its electric vehicle and domestic auto industry. Negotiations are ongoing, with Saudi officials meeting various Chilean authorities and companies to explore potential partnerships. Additionally, Saudi Arabia aims to export fertilizers to Chile and expand its non-oil exports to Latin America. The nation recently bought a stake in Vale SA's base metal unit and is seeking more investments in mining abroad. South Star's Brazil graphite mine to begin production in September. South Star Battery Metals has almost completed Phase 1 construction of its Santa Cruz graphite mine in Bahia, Brazil, with commissioning now underway and commercial production expected in September. Infill drilling and short-term mine planning are finished, and the miner aims to begin fulfilling initial purchase orders by the fourth quarter. The open-pit oxide ore mining operation is set to place approximately 50,000 tons of ore on the pad by August 2024. Santa Cruz's Phase 1 plant has the capacity to produce around 12,000 tons per year of natural flake graphite concentrates, making it the second-largest producer in the Americas. Plans are in place to expand production to 25,000–30,000 tons per year by 2026 and further to 35,000 tons annually by 2028, with environmental approvals secured for these phases. A 2020 pre-feasibility study values the operation with a life of 12 years, an $81.2 million net present value, and a 35% internal rate of return, with estimated capital costs of $8 million and $27 million for phases 1 and 2 respectively. Controversial Japanese gold mine designated UN heritage site. The controversial Sato mine in Japan, once linked to the abuse of South Korean workers during World War II, has been added to the UNESCO Cultural Heritage Site list after Tokyo agreed to present a full and accurate account of its history. This decision came during the annual UNESCO World Heritage Committee meeting, where Japan committed to new exhibition materials that convey the severe conditions faced by Korean laborers. The designation received unanimous support, including from South Korea, which had previously opposed it due to Japan's historical oversight. Japan has also promised to hold annual memorial services for the workers. Japan's Foreign Minister Yoko Kamikawa celebrated the recognition, while South Korea emphasized the importance of Japan's vow to truthfully portray both the positive and negative aspects of the mine's history. The Sato mine, which operated for nearly 400 years and was the world's largest gold producer before closing in 1989, now stands as an exceptional cultural heritage site. Nova Scotia stands firm on Touquoy mine cleanup. Atlantic Mining Nova Scotia, a subsidiary of Australia's St. Barbara, has lost its appeal against stringent reclamation requirements set by Nova Scotia for the cleanup of the Touquoy gold mine in Moose River. The company criticized the water quality standards as unachievable and threatened further legal action. Despite the ongoing appeal, the firm is continuing reclamation efforts and must post a $79.9 million bond, with $38.7 million due by September 3rd. Environment Minister Tim Hallman rejected the appeal and emphasized the necessity of meeting financial obligations, insisting on a strict regulatory framework to ensure mining compliance. Meanwhile, St. Barbara is exploring a renewable energy storage project at the Touquoy site. Guinea's Simandu iron ore project seen aiding climate goal. Guinea's Simandu iron ore project, spearheaded by Rio Tinto plc and expected to commence exports in 2 years, is set to significantly aid global decarbonization efforts. The project boasts iron ore with an iron content of nearly 65% and minimal impurities, allowing for less energy-intensive and lower carbon dioxide-emitting refining processes. This initiative involves a substantial $15 billion investment in mines, a port, and a 650-kilometer railway, with an estimated annual output of 160 million tons from the 8 billion tons in iron ore deposits. The project is a collaboration between the Guinean government and industrial partners, including winning consortium Simandu, Chinese firms, and Chinalco. China's COSCO Shipping, Fortescue to build green fuel supply chain. China's COSCO Shipping Corporation has signed a memorandum of understanding with Australia's Fortescue to collaborate on building a green fuel supply chain aimed at reducing pollution in the shipping industry. The agreement focuses on exploring the construction and deployment of green ammonia-fueled vessels for transporting iron ore and other minerals, thereby decreasing carbon emissions along the China-Australia iron ore shipping route. Both companies emphasize the importance of this collaboration in advancing their decarbonization goals, with Fortescue aiming for net zero Scope 3 emissions by 2040. This partnership comes on the heels of Fortescue's recent efforts to engage with potential partners in China and their pioneering trial of ammonia as a shipping fuel in Singapore. The future of deep-sea mining hinges on a contentious election. The Pacific Island nation of Kiribati is at the center of a heated election for the leadership of the International Seabed Authority, ISA, an organization that will play a crucial role in determining the future of deep-sea mining. Leticia Carvalho, a Brazilian ocean scientist, alleges that Kiribati's ambassador attempted to bribe her to withdraw from the race to favor Kiribati's candidate, the incumbent Michael Lodge. Lodge, committed to expediting mining regulations, faces Carvalho, who advocates for further negotiations to protect the deep sea. This election is pivotal as the winner will influence whether companies can commence mining the ocean floor for valuable metals needed for electric vehicle batteries. The election underscores a larger conflict within the ISA between pro-mining factions and those urging caution until the ecological impacts of deep-sea mining are better understood. By Todd Woody. Sayona, Piedmont mark improvements at NAL as lithium price slides further. 6 months after the cost-cutting review at their North American Lithium NAL mine in Quebec, Sayona Mining and Piedmont Lithium's operations have yet to stabilize. Despite a 23% increase in production to 49,660 dry metric tons of concentrate in the second quarter due to improved mill utilization and recoveries, shipments fell to 27,700 tons because of weather delays. Unit operating costs decreased slightly to $995 per ton, but these remain significantly higher than the realized selling price of $604 per ton, leading to a 58% drop in overall revenues to $25 million. The introduction of a new 6,000-ton crushed ore dome is anticipated to enhance production efficiency. Piedmont plans to ship about 96,500 tons in the second half of 2024, targeting a total of 126,000 tons for the year, amid challenges including an 80% drop in lithium prices last year.